We want to start with the latest numbers on job growth and unemployment. All eyes are waiting to see this morning's monthly jobs report from the Labor Department. CBS News business and economics correspondent Rebecca Jarvis here to tell us what we can expect this morning. Rebecca, good morning.
Hey, Chris, good morning. And this story really has an impact on every single American. It is the most significant report for analysts to get a read on just how our economy is faring. And if recent data are any indicator, we're not doing all that well. While companies are hiring, it just isn't fast enough to keep up with the high demand for jobs. Analysts expect today's report to show a gain of 150,000 jobs, almost 100,000 short of the gains made last month.
We definitely have seen a little bit of a deceleration in the labor market, it would seem. A lot of the signs are pointing to that.
The unemployment rate is predicted to inch down from 9% to 8.9%, an improvement but not nearly enough for the 14 million Americans still out of work. Analysts say the slowing trend may continue due to the sluggish economic growth, 1.8% in the first quarter of this year, high gas prices, and a double dip in the housing market.
The recovery has slowed, it's not creating enough jobs to bring down unemployment, and we are in danger of a double-dip recession.
With so much uncertainty at home, consumers are reluctant to spend money, and companies have little incentive to hire new employees, given their ability to maintain profits with a smaller workforce. And one area where we're seeing a big impact now is on manufacturing. It was one of the first industries to bring jobs back, and now factories, Chris, are running at a much shorter level than they were previously. That's a big concern for economists as well.
Obviously, it's not good to see the job creation numbers going down, but what would be a quote-unquote good number at this point?
In terms of where we are in the recovery, something above 250,000 jobs per month is what we need in order to really create the magnitude, the level of new job growth. If you look back over the past previous months, from February through April, we saw something of that magnitude. 300, even 400,000 jobs would be exactly where we want to see it at this point.
Looking at these numbers, such a robust winter and early spring, why are the numbers now trailing off?
What we're seeing right now is consumers really demanding less, and it's kind of a vicious cycle. Consumers are paying more at the pump, they're paying more for groceries, and they're spending less on other things. That means companies are cutting back on their employees, and then it's a vicious cycle because the employees don't have the money to spend on new things.
And real quickly, yesterday Moody's issued this warning: if the debt ceiling is not raised, the United States can kiss that sterling credit report goodbye, that credit rating goodbye. How big a problem is this?
It's a big problem. Default is going to cost Americans in terms of their pensions, in terms of their ability to buy a home or expand their business. It's a big ripple effect across the board.
All right, Rebecca Jarvis, thank you. Good to see you this morning.